Welcome back. As promised, let's get chatting with the management of Ramkrishna Forgings on the back of a fundraise plan that the company has announced to understand the road ahead for the business and, more importantly, what they're going to use the proceeds from the fundraise. We have Lalit Khetan, who's the ED and CFO of the company, joining us. Thanks a lot, Lalit. Always a pleasure speaking with you. 94 crore is the fundraise that you have. It is basically warrants which are issued to the promoters. Can you tell us what exactly is the current debt on the books? Are these funds going to be used to repay debt? You had a plan of repaying debt by almost 100 crores in the second half, right?
Yes, correct. And thank you for inviting me on your show. Certainly, this 94 crore majority of this will be used for the repayment of debt. But presently, in this financial year, we will get around 23 crore. And rest will come in next financial year because it is a warrant and entire money will come in 18-month period.
Yeah, all right. You had earlier told us that you were just looking at a debt reduction. I think FY23 debt reduction, you were guiding for a couple of 100 crores that it will come down by. But now you'll be getting only 23 crores. So do you stick to that guidance that you're likely to reduce debt by close to around 200 crores odd in FY23? By the end of this year, what will your debt look like?
Yeah, we stick to the guidance of reduction of debt by around 200 crore by FY23.
And as of now, as of today, what does the debt on your book stand at?
I think it will be in the range of 1250 to 1300 crore.
Right.
We have reduced some debt from the March 22 level already. And by end of March 23, there certainly be in the range of 200 crore.
All right, take that point. Also, let's talk about business as a whole, because nearly 2/3 of your revenue comes in from exports, be it a third of your revenue comes in from exports, be it the US as well as Europe. Europe, there are talks of slowdown. US as well, because you're part of the economically sensitive CV plays. There is also a talk of recessionary fears, etc. FedEx issued that profit guidance as well, profit loss guidance. If you could give us a sense of how business is for you, and in light of that, what does this year look like?
See, certainly there is a lot of discussion on the Fed rate hike and due to the resultant recession in the market on the North America or US. Similarly, due to the war, we have a fear of business going down in Europe, and the energy cost the energy cost has led into a lot of shutdown in unit in Europe, and which all are concerned to us. But for the RKFL, I think we are in a much comfortable space, and we on the ground we are getting very good traction, and we are getting a very good robust orders from our OEMs, both as well as in Europe and North America. Though certainly order inflow is less in North America if you look at the Class 8, but overall backlog is quite impressive. And what happened with RKFL, we have been able to gain a wallet share with each of our customers and able to increase our content per vehicle with our customers. That's why we are able to improve upon our sales, and we will be having a better exports than the last year what we did, and overall sales will be much better.
All right, you said you're increasing your wallet share, Lalit. If you could tell us, what was it? What is it currently? If you can put a couple of numbers to that. And given the bit of a slowdown that we're seeing globally, the domestic market is coming up to speed as well. What kind of a tonnage number are you looking at by the end of this year? Should it be in that vicinity of, say, around 150, 155,000? Or will it be more than that?
Yeah, what you said exactly near to that 155,000 tons around, because we are predicting a 15 to 20% growth, rather more than 20% growth for the full year from the last year what we did, and what last year we did around 130,000 tons. So it looks like 155,000 plus.
Right, and you said
and on the wallet share, on the wallet share, I would say, we are constantly increasing. I cannot put a number on the wallet share, but what at RKFL we have we are constantly trying to improve our wallet share with each customer, and trying to reduce concentration with the customer also. That over the last 5 years we have successfully able to do. Though we have gone down in terms of overall percentage of the company sales to the customer, but we have been increased in the absolute amount the sales with that customer.
And
so that's our constant endeavor.
Is the content per vehicle right now?
See, we are more than 66% right now.
Okay. And, you forayed into the EV space as well. It was about 6-7% of your revenues. How much do you think this can be going forward in the next, say, 2 to 3 years?
See, that's again evolving. I will say because it's depend upon the growth of the EV market. We are there, and a lot of our OEMs are having the EV models, and we are producing the EV products for them. And the target for the current year is, I think, 3 to 4% for the total sales of the company.
That EV segment was FY24.
And FY24, yes. The FY24, we are looking at 6 to 7%.
And for this year, 3 to 4%.
Yes.
The other mix that you're looking at is the auto and the non-auto component. I think non-auto was around 20-21%. You're looking to take that to around 30%. And out of that, I believe railways is a big potential. So how much will railways contribute as a percentage of your total revenues, say for this year and for the next year as well?
This year, FY22, it was around 2%. For FY23, we look at more than 4% from the railway itself. And overall target is to reach to around 8 to 10% from the railway in by FY25.
Okay. And you also won this order for, supplying of metal bars. Has that anything to do with the railways, or is this an entirely different customer? You said it's a business potential of almost 80 crores per year. By when does this happen, and who does this go to?
This will be to our European OEM.
Okay.
And this will start from the next financial year.
And 80 crore potential is by when? Next financial year itself?
Yeah, no. Next financial year, I think we have said it's 30 crore to start with.
Okay.
And it has potential to go to 80 crore. So it will take a year or two to go to 80 crore.
Okay, all right. What about on the margin parameter, Lalit? Input costs are cooling off. Operating leverage will play out because your volumes are going up. What is the rough margin band we should be working with for RK Forgings?
Yes, see, a lot of things here on the margins. See, the power cost is going up, and few input costs are going up. Certainly, commodity prices is cooling off. And certainly, there is a benefit on the logistics side. The freight costs are easing up. So, certainly, that is balancing, and it will have a little positive impact. And we will try to improve upon the margins what we have in the earlier period.
23% is what you did. 22-23%. So should we hold on to that?
Yes. Yes, certainly. Certainly, that's the minimum basic. We will be hold on to that, and we will try to improve upon it.
Okay. And what about the business that you're looking at in terms of client additions? How many client additions can you do this year?
See, it's a process and it's going on. I cannot put a number again here. But see, if you look at, we added around 900 crore plus order last year.
Yes.
And this year already the number is 300 crore plus. And there is a lot in the pipeline. And with the time, we will let you know what orders we are winning. And it's a quite healthy progress, I will say, pipeline. And the orders, what we win are the new orders and new products. That's not the conventional, whatever we are doing. So that we will be appropriately announcing to the streets and the stock exchanges whenever we have anything on that.
Right. And what about the ACIL acquisition? What's the status out there? I mean, I understand that, is likely to boost your top line by what? 500 crores over the next 2 to 3 year period. What's, the status there?
Yeah, this is still currently pending in Supreme Court, and we hope a hearing should happen because we are not able to get hearings for quite some time due to preoccupations on one or other account. And if it happens in 1 or 2 months, next 1 or 2 months, then it should be through within this financial year. We hope that.
And finally, have you asked some of your vendors to reduce their prices, steel prices? Because the last time you joined us, you said that these are 6-month contracts. When does this contract period end, the cycle, and when is it likely to be revised?
No, in our case, the steel prices is the major appeal. Here, we don't have to play any role. It's the role between the OEMs and the steel mills only. And if that agreed between that, we have to just execute at that level and pricing, product pricing accordingly being decided.
All right. Take that point, Mr. Khetan. Thank you so much for joining in and giving us the outlook on your business, looking to repay debt by almost 200 crores.